Welcome back. Between two fiduciaries, that is me, Jeremy Whidden, and this is Jimmy Burns here from On Track Wealth Development. This week we're going to be talking about three major indices. All right, here we got the first one. This is year-to-date performance for the S&P 500, the Dow Jones, and the Nasdaq Composite. Jimmy, what are you seeing?
So these are the three most commonly viewed indices. They are representative of typically U.S. large cap stocks. And what jumps out at you here is that the Dow Jones is the best performer year to date, and the Nasdaq is trailing significantly, almost down 30% year to date. And the S&P 500 is a blend somewhere in the middle of the two.
It is an interesting mix here on year to date. So as you're going to see in the subsequent slides, things aren't always the same when we kind of look at a longer time horizon. This here is a 3-year performance chart, and obviously they've tightened up a lot in terms of their performance.
Right. Yeah. So where we saw the wide gap and the disparity between the Dow and the Nasdaq year to date, you see a much tighter performance disparity in a 3-year time horizon.
Yeah, and I just find that really interesting. I wasn't expecting it to kind of wind up that tightly, but it's an interesting view, this 3-year, is no doubt about it. The next one here, this is a 10-year performance chart. So obviously this one is showing you a little bit different story still, right? Versus where we were before. The NASDAQ is actually a pretty outsized winner compared to the other two indices.
Yeah, you have a complete reversal of what we've seen year to date. The S&P is still in the middle, but now the Nasdaq is the big winner, and the Dow is trailing by quite a good margin there. I think what these charts really provide is a lesson in perspective. And if your perspective is based solely on year-to-date performance, you think that the Dow is the best. But if you are able to have a longer-term horizon, you'll see that over the last decade that the Nasdaq is actually the top performer.
So is it fair to say, if we're looking at these indices and kind of trying to tell a little bit about their personality, NASDAQ, we know that to be a tech-heavy, growth-oriented index, right?
Yes, absolutely.
We've got the S&P 500, which is the 500 largest large cap stocks, U.S. based.
Correct.
And then lastly, the Dow Jones, that's your 30 industrials. Right. It's a diverse group, but it's sort of a value group, isn't it?
Correct. Yeah, it has more of a value tilt, which is, as you mentioned, the growth stocks. I think most people recognize that the growth technology stocks have carried the weight for the index performance over the last decade, but they haven't done it nearly as well in 2022.
So a little bit of balance, knowing this going into the future. It's not just one of these that you need to put in your portfolio. It's a little bit of everything, right?
I think that's diversification and perspective are important lessons to take from these charts.
Well, that's all we have this week. Thanks again for signing in and listening. Have a great one.